Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 21st, 2025, and we're diving into PulteGroup's latest earnings report for the third quarter of 2025. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. PulteGroup, one of the largest home builders in the U.S., has just released its Q3 2025 financial results, and there's a lot to unpack, from earnings per share to home sale revenues and strategic initiatives.
Revenue and profitability overview. Let's start with the top line. PulteGroup reported home sale revenues of $4.2 billion for the third quarter, a slight decrease from last year. However, the company achieved an adjusted earnings per share of $2.96, beating the forecast of $2.86. John, can you elaborate on these results?
Absolutely. While the revenue saw a 2% decline from the previous year, primarily due to a decrease in closings, the company managed to maintain a strong gross margin of 26.2%. The adjusted EPS of $2.96 is a positive surprise, reflecting effective cost management and operational efficiencies.
Operational efficiencies and future outlook. John, PulteGroup's operational strategy seems to be paying off. They reported net new orders totaling 6,638 homes and a backlog of 9,888 homes. How does this position them for future growth?
The company's diversified business platform is a key strength. Despite a 6% decrease in net new orders, the backlog remains robust, indicating strong future revenue potential. Additionally, PulteGroup's strategic share repurchase of $300 million underscores their confidence in long-term growth and shareholder value.
Market challenges and strategic responses. Despite the positive financials, PulteGroup faces market challenges, such as weaker consumer confidence and affordability issues. How is the company addressing these?
CEO Ryan Marshall emphasized a disciplined approach, focusing on long-term strategies and capital allocation. The company is encouraged by lower interest rates, which could boost buyer demand. However, they remain cautious, monitoring market conditions closely to adapt their strategies effectively.
Financial services and risk management. Let's touch on PulteGroup's financial services and risk management. They reported a pre-tax income of $44 million from financial services. What are the key takeaways here?
The financial services segment, while slightly down from last year, remains a solid contributor to overall profitability. With a debt-to-capital ratio of 11.2% and cash reserves of $1.5 billion, PulteGroup is well-positioned to manage risks and capitalize on opportunities as they arise.
Key takeaways. In summary, PulteGroup has delivered a strong performance in Q3 2025, with impressive earnings per share and strategic initiatives that position them well for future growth. John, any final thoughts?
PulteGroup's disciplined approach and strong financial position make it a compelling investment prospect, especially as market conditions improve. Their focus on shareholder returns through dividends and share repurchases is also noteworthy.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on PulteGroup's performance in the comments below.